evolution of banking is broadly classified into two types. One is pre-independence phase and post-independence phase. The Bank of Hindustan is the first bank which is established in India in the year 1770. The banks were nationalized under the Banking Regulation Act 1949, whereas the Reserve Bank of India was nationalized in the year 1949. In the year 2017, all the subsidiary banks of SBI is merged with State Bank of India, then it is called as SBI. Hello everyone, a warm welcome to one and all to the first session on Law and Practice of Banking. I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. In today's session, let us start with the first unit, that is Introduction to Banking. So in today's session, let us discuss with the Introduction of Banking, then meaning and definition, origin and evolution of banking and classification of banking. First unit is all about Introduction to Banking. So you all know what do you mean by bank. So as a commerce student, we all know what is bank. Bank is a financial institution which accepts the deposits from the public and they lend money for the needy people. So this is the business activity, or this is the activity in order to contribute for the economic growth. So bank is a financial institution which safeguards our money. So we want protection for our money, as well as we want some income or interest for that deposits. So if we keep 50,000 in our hand for 1 year, so we don't get any interest or any benefit out of that money. So if the same amount is kept in a bank, they are going to give you an interest. So the bank is going to use that money in order to lend the needy people. So it's a financial institution which accepts as well as which lends the money for the general public. So along with the accepting and lending money, they will take other several activity or other several banking activity that we are going to learn under this unit. So banking is a business of protecting the money for others. So bank is a financial institution which protects others' money. So our money, the bank is going to protect. Bank lend this money, generating interest that creates profit for the bank and its customer. So through this lending activity, bank is going to charge interest from the public. That profit they are going to use to maintain their business activity as well as in order to give interest for the customer. So for the deposits, they need to give interest. So for that, they are going to lend the same money for the other customer. So from them, they are going to collect interest. So that profit they are going to use to maintain their business activity as well as in order to give interest for their customer. So moving further, what do you mean by banking? Meaning and definition. A bank is a financial institution licensed to accept deposits and make loans, but they may also perform other financial services. So not only accepting and lending the money, they will undertake various other business activity. So bank is a financial institution that accepts deposits from the public and creates a demand deposits lending, while simultaneously making loans activity can be directly performed by the bank or indirectly through the capital market. So directly they are going to create the demand for money, or else through this capital market they are going to create demand for the money and they are going to lend money for the general public. So moving further, origin and evolution of banking, how it takes place, importance. So how it is developed in India. The banking system of country upholds its economic development considering the economic condition of the people, need for the financial services and the advancement in technology that followed the Indian banking. Industry has gone through the major transformation over the past 5 centuries. So initially we won't depend on the banks. So barter system will exist. So here we don't use the currencies. So when the currencies are introduced, then the customer or the people start saving the money. So now they have a physical cash. So initially we are transacted with the barter system, like exchange of goods and services. When the currency introduced, the customer starts saving their money. They start gathering money. So then it takes place importance. That means they want to save money. So then it starts the importance. So after that, customer depends on the money lenders. The customer is not familiar with the bank, so that depends on the money lender. They are going to take money from the money lender and they are going to pay interest for them. So that was the higher rate of interest. So in order to reduce all this, the banking came into existence. Let us look at the evolution of banking in India from the first bank till mobile banking. So now we have a mobile bank and e-banking, various banking facility. So let us look into the evolution from the first bank, which is the first bank which is established in India, and the year. So till now. So let us look into the evolution of banking in India. What all are the changes which happen in between? So let us look into that evolution. This evolution of banking is broadly classified into two types. One is pre-independence phase and post-independence phase. Under post-independence phase, we are going to study as a three-part. First one, nationalization phase. Next, post-nationalization phase and liberalization phase. So we are going to study the evolution of banking under two classification. So further it is classified into three categories. So let us look into the pre-independence phase. Under pre-independence phase, it is from 1770 to 1947. So the first bank which is established in India in the year 1770. So the origin of banking sector in India dates back more than the century before the independence. So the first bank which is established in India is Bank of Hindustan. So Bank of Hindustan is the first bank which is established in India in the year 1770. So it is established in the year 1770 in Calcutta. So but it failed due to course and it was liquidated in the year 1832. This failed to operate in India and it is liquidated in the year 1832. So after that, during the pre-independence period, over the 600 banks were established. So after this Bank of Hindustan, the other over 600 banks were established, but they are also failed to survive in the Indian economy. So due to various reasons, they cannot survive in the economy. So what all are the banks which is established in the pre-independence phase? So let us look into that. So the other 5 banks which is established during the pre-independence phase was the General Bank of India, next Oud Commercial Bank, then Bank of Bengal, Bank of Bombay and Bank of Madras. During the British rule in India, the first Indian bank, they will establish 3 banks. So Bank of Bengal, Bank of Bombay and Bank of Madras. So during the British period, they are going to establish 3 banks. So later it will be merged. So later all these 3 banks will merge and it is called as Presidential Bank of India. So after that again it is merged and renamed as a single bank in the year 1972, that is Imperial Bank of India. So again it is merged and named as Imperial Bank of India in the year 1972. So later this Imperial Bank of India is nationalized and renamed it as a State Bank of India. So in the year 1955, this SBI, so Imperial Bank is named as a State Bank of India. So later, further the other banks were established and it is continued to operate in India. So what all are the reasons to failure of the other banks? The over 600 banks were established during the pre-independence phase. So what all are the reasons for the failure? When we look into the reason was, first one, the Indian customer became fraud. Then human errors and time consuming. So initially we don't have any machinery and technology. So we depend on the individual like human resources. So it is a time consuming process in order to record all the information. So all the transaction you need to record. So human errors leads to failure of operations of banking. Next one, few are the facilities. So initially we don't offer so much of facility for the customer. So few are the facilities. All these are the reason for the failure of banks in India. So during the pre-independence phase, over the 600 banks were established and they failed to survive in the economy. So these all are the reason for their failures. So let us move to the post-independence phase. So moving further, next step is post-independence phase. At the time India got independence, all the major banks in the country were nationalized. So it is privated. Initially all the banks were government banks. So now it is led for private sectors. So then the people belongs to the rural area were still dependent on the money lender for the financial assistance. So rural area. So people in the rural area depends on the money lenders. So because the interest is high, they don't know the facilities and they don't know how to operate with this banking sectors. So due to this lack of information, they depends on the money lenders. So then with the aim to solve this problem, then the government decided to nationalize the banks. So in order to solve all these problems, the bank decided to nationalize all the banks in India. So the banks were nationalized under the Regulation Act 1949. The banks were nationalized under the Banking Regulation Act 1949, whereas the Reserve Bank of India was nationalized in the year 1949. So Reserve Bank of India is nationalized in the year 1949, and now the RBI has the sole power in order to control and in order to guide the other banks in India. So they are going to control through this Banking Regulation Act 1949. So the following, it was the formation of State Bank of India in the year 1955. In the year 1955, the imperial banks is renamed, nationalized and renamed it as a State Bank of India. So other 14 banks were nationalized between the time duration of 1969 to 1991. So during this period, another 14 banks were nationalized. So under this Banking Regulation Act 1949. So they were the whose nationalized deposits were more than the 50 crores. So their deposits were more than the 50 crores. So the list of 14 banks are Allahabad Bank, Central Bank of India, Canara Bank, and the list goes on. So other 14 banks were nationalized along with this SBI, State Bank of India. So then in the year 1980, another 6 banks were nationalized, taking the number to 20. That means initially the 14 banks were nationalized. Next step, the other 6 banks were nationalized. Totally 20 banks are nationalized in the year 1980. So in the year 1980, totally 20 banks were nationalized along with this 14 banks. So next, apart from this 20 banks, there were 7 subsidiaries of SBI were nationalized in the year 1959. So apart from this 20 banks, so the other 7 subsidiaries of SBI, State Bank of Mysuru, State Bank of Hyderabad, so the other 7 subsidiaries of SBI is nationalized in the year 1959. So all these banks were later merged with this State Bank of India in the year 2017. In the year 2017, all the subsidiary banks of SBI is merged with State Bank of India, then it is called as SBI. So except State Bank of Saurashtra, which is merged in the year 2008. So before this, State Bank of Saurashtra is already merged in the year 2008, and the State Bank of Indore, which was merged in the year 2010. So apart from these two, total 5 banks were merged with SBI in the year 2017. So moving further, what all are the impacts of nationalization? Impact of nationalization, there were various reasons why the government chose to nationalize the banks. So the given below is the list. What all are the impacts? So this leads to an increase in fund and thereby increasing the economic condition for the country. So it helps to increase the fund and it helps to increase the economic condition of the country. So then it helps to boosting the rural and agricultural sector of the country. So agriculture is the backbone of India. So it boosts up the rural and agricultural sector in India. So next, it opened up a major employment opportunity for the people. So now employment opportunities are increased. Then the government used profit gained by the banks for the betterment of people. So bank is going to receive interest and they are going to give interest for their customers. So they are going to charge more interest for the lending and they are going to pay less interest for deposits. So this profit, they are going to use the profit from this banking activity, they are going to use for the betterment of people. So through this nationalization, the bank starts earning profit. So they are going to use this profit for the betterment of people. So next, competition decreased, which resulted in increased work efficiency. So now all the banks are nationalized under the Regulation Act 1949. So now the RBI is going to control, they are going to guide all the banks so that the competition is decreased. So automatically work efficiency increases. So this post-independence phase was one that led to major development in the banking sector of India, also the evolution of banking sectors. So this nationalization plays an important role under the evolution of banking as well as for the development of Indian economy. So it contributes for the economic growth. This is all about the evolution of banking. So moving further, next topic is classification of banks. So banks are classified into various types. So here banks are classified into 4 types. First one is commercial bank, next small finance bank, payment bank and cooperative banks. So commercial banks are further classified into 4 types: public sector, foreign, private sector and RRB. RRB means regional rural bank. Then cooperative banks is further classified into urban cooperative and state cooperative bank. So now let us start one by one. First one, commercial bank. So commercial bank is regulated under the Banking Regulation Act 1949. So the main objective of commercial bank is making profit. So their main objective is to earn profit. So they accept the deposits and they lend the money for their general public. So their intention is to make profit. So out of this banking activity, they are going to make profit. So the commercial bank is further classified into public sector, foreign, private and RRB. So public sector bank. The public sector bank is a nationalized and it is account for more than 75% of banking, more than 75% of the banking activity in the country. So they have the contribution for total banking system is 75%. So more than 75% we have a public banks. So their objective, so major stakes of this public bank is held by the government. So the government is going to handle. So all the shares were held by government. SBI is the largest public sector bank in India. After its merger with subsidiary bank, SBI got position in the top 50 banks of the world. So it got position under the top 50 banks of the world. So here major shares are held by government. Next one, foreign bank. Foreign bank, the type of bank, headquarters is located in different country and they are going to operate their business in all the country as a private entity. So their obligation is to obey the order, or their obligation is to follow the rules and regulations of headquarters as well as in which they are operating. So they has to follow rules and regulation from both the countries. So that is foreign banks. So next one, private bank. So private bank is also a type of bank. So here they are going to lend money for the general public, corporation as well as the government. So public company is going to offer, or they are going to lend money for the general public as well as the corporation as well as the government. Here private companies also they are going to lend the money for general public, but they are going to regulate. So the controlling authority, or they are going to run their business based on the regulation from the RBI. So they are going to run their business under the Banking Regulation Act 1949. So the rules and regulation will applicable for the private banks also. So here the rules and regulation is applicable for public sector as well as the private sector. The rules and regulations are same, but major shareholders are general public or the external source under the private sector and government under the public sector. This is all about the difference between this public and private sector. So next one, last one, regional rural bank. So regional rural bank is also a scheduled commercial bank which is established in order to promote the weaker section. They are going to operate in a regional area in order to promote the weaker section. So they are going to provide funds for the self-employment as well as the agricultural activity and for the various activity in order to promote their activity and in order to encourage so entrepreneurship as well as the self-employment and small scale industry. They are going to provide fund for this regional area. They are going to operate in a regional area as well as the selected urban area. So this regional rural bank, they are going to provide financial benefits. They are going to provide the banking facilities like debit card, credit card and all the facilities for their customer in rural areas. So they are going to provide all the banking facility for the people or customers in the rural area. So this is all about the commercial bank and commercial banks types. So next one, small finance bank. Small finance bank, it's a niche bank. It's a small bank or small sector which is established in order to provide the financial services for those who don't get a benefit from any other banking sectors. So for the small scale industry, for the micro business, for the self-employees, for the entrepreneur, they are going to provide a small fund or small finance in order to encourage their business activity. So this is the business or banking activity or banks which is established in order to promote this small business activity or small scale industry. Small finance bank is going to regulate under the RBI Act as well as the FEMA, Foreign Exchange Management Activity. Foreign Exchange Management Activity. So this two act is going to govern or is going to direct this small finance bank. So next one, payment bank. So payment bank is a bank, they are going to accept only the limited or restricted money from the public, and they are going to lend the restricted money for the general public. Currently, it restricted to 1 lakh rupees. They can accept only 1 lakh rupee from one customer or one people. They are going to accept only 1 lakh rupees. So, and they can lend only up to 1 lakh rupees. So, the amount is restricted to 1 lakh rupees. And also, in addition with this, they are going to give the facilities like debit card, credit card, net banking, and all the banking facility. So, they are going to accept and they are going to lend the money as well as provide the other banking facility. So, next one, cooperative banks. So, cooperative banks is established under the Cooperative Banking Society Act 1912. So, it is established Cooperative Society Act 1912. So, this cooperative bank is going to run under the management of their selected committees. So, the selected committee members is going to manage, or they are going to guide this cooperative banks. So, their intention is to provide benefit for the needy people. For example, in the urban area, in order to promote the entrepreneur as well as the self-employment, in order to increase the employment opportunity in the urban area, they are going to operate. In the rural area, that is urban cooperative society, as well as in the rural area for the farmer and for the various activity like farming as well as the livestock and all the agricultural activity. In order to promote all the agricultural activity, they are going to provide finance. So, at a lower interest rate or without interest, they are going to lend money for them in order to promote their activity. They are going to run their cooperative banks. So, these cooperative banks will operate in rural area as well as the urban area in order to promote weaker section and in order to promote this business activity. So, in the urban area for the entrepreneurs and small business, and in the rural area for the agricultural activity. So, this is all about the classification of banks. So, we are going to learn all this topic in a coming up sessions in detail. So, what do you mean by commercial bank? What all are the functions of commercial banks? So, that we are going to learn in detail in the coming up classes. We have a just brief introduction or brief explanation about this classification of banks. So, in the coming up session, let us discuss in detail about this topic. Here, the banks are classified into commercial, small business, payment and cooperative. Again, it is further classified into 2 and it is classified into 4. So, this is all about the classification of banks. In the coming up session, let us discuss in detail about all these topics. This is all about today's session. Let us meet in the next session. Until then, keep watching. Thank you.